In this presentation, we will continue on with our S Corporation Comprehensive Problem Part 12. We're going to have an M-1 adjustment related to meals. We're going to be using Lacerte tax software. Lacerte is owned by Intuit, the owner of QuickBooks. Other tax software will be similar in terms of the data input and generating the tax forms with it. If you would like to enter this directly into the tax forms, we will provide those, or you can find them on the IRS website at irs.gov, irs.gov. Here we are with the 1120S. If we look at the 1120S, we're going to then go down to page 4 and just reconcile that we are in balance, or just note that we are in balance here. I always like to do that at the starting point of any kind of adjustment that we are then going to make. If we then go into Excel, we're now looking at an adjustment related to meals. Now, you'll recall when we entered the meals, meals is one of those things that it's the most common, or one of the most common kind of adjustments. Now note that it has changed. It used to be meals and entertainment. There's 50% meals and entertainment. It's like ingrained in anybody's head that's done taxes for any point in time. It's so ingrained that the software basically just does the adjustment for you. Most of the time, most software will actually just do the adjustment. Now note that meals and entertainment has now changed. So you want to go in and think about the new changes and what qualifies for meals and entertainment, but we're still going to have an adjustment related to the meals. And because it's such a common adjustment, and it's basically going to say that what qualifies as 50% meals will then be basically the 50% deductibility. So we're then going to the software will then usually just do that for you. But whenever the software guesses something and does the M1 adjustment for you, then it can kind of throw you off when you're trying to do the step-by-step process to enter things into the system. Because what we wanted to do is we wanted to enter the full amount first and then enter the M1 adjustments, rather than thinking about 10 M1 adjustments at the same time when we're just trying to do the data input and make sure that we don't miskey anything on the data input. So instead of if we go back to the software then, and if we go then to page 1, we're considering the meals and entertainment. We didn't put it into meals and entertainment, but rather into the other deduction. In other words, if I go into the data input screen for meals and entertainment, we're going to say here, if I put the full amount, it'll automatically take 50% and do an M1 adjustment for it. But we didn't want to do that at first because that's going to throw us off. So rather than doing that, we entered it into the line item down below, into meals down here. So it's just a normal deduction. So now what we're going to do is we're actually going to make this adjustment. Now, I'm just going to delete the entire meals line here, because when I enter it into the meals line up top in the data input, it'll do the adjustment for us. So in other words, if I say okay, and I go back up top and I go into this form, I see meals here is in at 4,000. It should be 2,000 because we're going to say 50% of it's going to be deductible. I'm going to close that back out. Going to go back over here, and I'm just going to remove it from here, and I'm going to let Lacerte do the adjustment. It's going to be the same thing. I could put an M1 for 2,000. I almost like doing that better because then I can see it. I could see the M1 in the data input. But again, it's so common. The software, it's such a common adjustment that the software basically will do it for you. So I'm going to go back up top. And whenever you go into a data input screen, into most software, it's going to say, oh, it's a 50% meals thing. That means usually you're going to put the full amount here, 4,000. And then when you go to the forms, it's going to take 50% of it. So then if I go back in here, we have the meals now at 50%. So it did the adjustment for us, and it already did the M1. We don't have to enter the M1. So that could be helpful, but it's also kind of hurtful at the same time, because it could be confusing when the software does some of the M1s for you. It's trying to help you, but it's also a little bit confusing. So you may actually want to manually put the meals in there and then do the M1 manually, because then you can do it as a journal entry format in a similar fashion. So just keep that in mind. Here it is at 2,000. That changed the N number here. If I go to my Schedule L, are we still in balance on the balance sheet? We are. Why? Because it did the M1 for us automatically. So if I go to the page 5 then, because we entered it in that data input screen, we had this change, there's the M1. So now let's do that adjustment on our tax software. I'm going to go back up to page 1. I'm going to go then to, and we need to change that 2,000, the 4,000 to 2,000. This needs to go down to 2,000. So I'm going to say, all right, there's an M1 adjustment. I'm going to say this is tax journal entry. The meals is going to go on the bottom. Top number is going to be the M1 for the non-deductible meals. So I'm going to pick that one up. And it's going to be for 2,000 is the adjustment. 2,000 debit and credit. So we're going to go up top then to the meals first. So we're up top. I'm going to put the credit here in P28 equals the credit. That'll bring it down to 2,000. We brought it down by 2,000 to 2,000. Then we're going to scroll down to the M1 adjustment in P45 equals, scrolling back up, and this is going to be the debit of the 2,000 and enter. That brings it up here. So that puts us back in balance in terms of total debits and credits. And we have an adjustment then on this side because it put it down. It's not including all the M1 adjustments and the Schedule K adjustments. So now let's see if we match out to the tax return. So the tax return, first page of the 1120, I would expect to be a total of the 65,510. Back to the tax return, 65,510. That looks good. These are checked off. Those were done last time. We're going to then go to page 3. Page 3 starts off at the 65,510. That looks good. And then we're going to go down to page 4, and we're ending off at the 75,510. Also note when you reconcile these items, you're really looking at the first page. So on the Schedule K adjustments, you'll note that you're basically looking at these are going to be the adjustments that you're going to be dealing with. And the second page is going to be kind of information type of information. So we'll do a reconciliation on that to explain that more clearly basically at the end of this. So in any case, we're at the 75,510 here. We're then going to go to the page 5 where we have the adjustment for the 2,000 on the M1, and then we have the 85,710 and the 75,510. So we've got the 85,710 and the 75,510. So everything looks like it's tying out properly. Let's go up top, and I'm going to highlight these. I'm going to check those off. So that looks good. Then I'm going to go back to our open items. I haven't gone back to them in a few times here. So we have the officer salaries. We broke that out last time, so I'm going to cross that out. Depreciation calculation. We did that a long time ago. So need fixed assets detail. So depreciation calculation has been done. So I'm going to cross that out. And then we had the meals. We did that. So the meals are done. So now we're down to the bad debt expense and the cost of goods sold. So we're moving along. I'm going to go ahead and save this. I'm going to go back to the Excel worksheet and I'm going to save this.